Hey, everybody. I am pleased to be joined by the one and only Michael Saylor from MicroStrategy. You guys know he's a huge Bitcoin advocate. He's been on the show before, and we worked the entire show to get one laugh out of him. Michael, do you think we're going to go over under one laugh on this show? It's got to be over one.
You're already winning.
Okay, I love it. I love it. I love it. Michael, you're definitely one of my favorite people in crypto for sure. I love watching your takes on things. It's really been amazing to see how popular you've gotten. Obviously, every time you're buying Bitcoin, you're winning over a lot of people. So I thought for this interview, what would be really cool, we're gonna make this the people's interview. Had a lot of people on Twitter send in questions, and we're gonna get your take on various topics. Some of the stuff maybe we talked about the last time you were on the show, but a lot of it is definitely going to be original. So let's start here, Michael. There was a lot of controversy stirred up by a certain segment of my show that got tweeted out by my social media team, and it was regarding Bitcoin switching over to proof of stake. This is something that, you actually commented on that post, and that's ultimately, how we got the second interview going. But I had this question specifically from @FeedEdvin. He says, "Hey, BitBoy, I heard you were advocating for Bitcoin abandoning proof of work and changing to proof of stake. Would love it if you ran that idea by Saylor to get his take on it. If you haven't changed your opinion, could turn into a constructive and interesting discussion." So I do want to get your take on that. But just to be clear on my take on it, my take is, it is possible, it is technically possible for Bitcoin to move to proof of stake. And my whole argument behind that would be just the climate change advocates getting so loud that eventually Bitcoin could be forced in a way. And of course, the people on the network to be forced to move from proof of work to proof of stake. What is your take on proof of work? Do you think it's definitely here to stay? What are the advantages of it? And could you even imagine a scenario where it would have to change?
Yeah. Well, first of all, I think that proof of work mining with Nakamoto consensus, which is what Bitcoin mining is, it's the only proven method for creating a digital asset that is a property rather than a security. And this is a pretty critical idea. In order to be property or a commodity, that is a commodity or property is like gold or land or soybeans or a stack of lumber, right? The idea is no entity controls your permission to own it, and nobody else in the world can modify the supply of it reasonably. And so if it looked like an equity or a security, then there's the sense that somebody, a company, an individual, a team of people would have control over it. So in securities law, I mean, there's a pretty bright line between property and security. And the way that you get property is you have a permissionless open protocol that is organically decentralizing. So the real elegance of proof of work is that in 10 years, someone that owns no Bitcoin can read the paper. They can go and drop a piece of hardware on a volcano somewhere you don't know of, plug in the internet, and start to create Bitcoin, and no one can stop them, right? It's literally permissionless and it's open. Now, you're not guaranteed to have a property or a commodity just because you use that. There are things you could do that would make it look more like a security. But the fact that Bitcoin has the history it has, where the Satoshi coins never moved for about 18 months, I mean, from whatever, January 3rd of 2009 to May 22nd of 2010, that pizza day, the product basically was mined kind of as a hobby. Right. And then it traded for a couple of pennies. And so on pizza day, the protocol was 21 million hard cap. The block size was set. All of the incentives were set for the next 1,000 years. Now, we weren't sure whether someone would mess with that, but then along comes the block size wars. And the block size wars, a little civil war, and the conclusion is the original protocol was unchanged, and now Bitcoin has this 12, 13-year history where the protocol hasn't changed, and no one ended up getting any of it in a pre-mine or initial coin offering, and there's no treasury and no management team, which means that anybody holding Bitcoin today either mined it or they paid a fair value. And the fair value came many, many years after pizza day, right? So like in my company's case, we put nearly $4 billion up to buy less than, 0.75% of the supply. And we had to pay 3 billion, 750 million, some huge amount of money. So if you're a regulator and you're looking at it, you say, well, that looks like a fair distribution and it is property. And of course, we actually have pretty clear consensus from the SEC and other regulators around the world that it is property. The issue with flipping it is like, some people would say, oh, it's great if we can do it without energy. But the problem with flipping it is that there is no proof of stake network that has been acknowledged as a property yet. So the regulatory hurdle that's going to have to be covered by other consensus mechanisms, they have to get consensus that they're property. And in fact, you're working against a hurdle, which is, I think on multiple occasions, regulators have said that if you stake something and get a yield on it, it's an investment contract. And if it's an investment contract, it becomes security. If security is not a commodity, if it's not a commodity, it's not property. Now, a security has value. It looks like a company equity. And if you had 24/7, 365 trading security tokens, that's a lot better than traditional equity, public equity, which only trades 9:30 to 4 on two markets, the NASDAQ and the NYSE. Right. And that's better than private equity. So clearly there's a value in security tokens, but the problem is if you're a public official, if you're a mayor, a governor, a senator, a congressman, and if you stood in front of Congress and said, I really think Facebook stock is a better store of value than the US dollar. Or if you said, I want everybody in my city to own Twitter stock, people would say, it seems like a conflict of interest.
Yeah, 100%.
Okay. So ultimately, if you look at the crypto economy, it's, at the foundation will be commodities that are universally acknowledged property. And then you can stack on top of those things, securities or other, and there are other protocols, by the way, Lightning protocol, other protocols that may not have a token, they have a place too. But the reason that Bitcoin is not going to switch to proof of stake is because, for one, of course, the entire community fought a civil war to keep the policy from changing, the protocol from changing, and that's why it is what it is. But number two, it's highly likely that if you did it wrong, you would end up becoming a security. And if you become a security, its usefulness for a nation state or a public figure would dramatically deteriorate. Plus, you've got this permission issue, which is who has permission to stake their tokens. And then the software developers have to write some code to decide who gets to stake. And the problem with software code that controls who can do this is that someone writes the software. Yeah. And then the issue is who writes the software. So it would drive the thing into chaos. So I don't think politically it will ever happen, but I think that reasonably speaking, if you look at the energy usage of Bitcoin, it's not really an environmental problem because the energy intensity is falling by anywhere from 18 to 37% a year. It's collapsing. Michael, so it's a different thing than if it's a real energy network, it competes against buildings and land and lumber and gold. Whereas if it's a virtual energy thing, it competes against other virtual metaverses and virtual software companies. And ultimately, those two battles are different battles, not the same battle.
Yeah, if I could hear, I think here's where a lot of people might have been confused by what I was saying, which is everything you're saying makes totally logical sense. Everything is completely logical. The climate change advocates are extremely loud and extremely illogical. They're purely driven by an ideology of, Bitcoin bad, energy bad, lights bad, air conditioning bad, everything bad. And what we see, I believe, is I think we see, big oil moving over to big solar, and we see like a lot of the environmentally friendly things. You see a lot of money coming into that space, money that may not be for Bitcoin. I don't think it's logical to say, oh, we should move Bitcoin from proof of work to proof of stake. But it's almost like Bitcoin is on like this timer, like this countdown with the climate frenzy out there, that the cries would get so loud that there's almost nothing, nothing that can be done about it. I understand from a logical standpoint, everything you're saying is true. It's like Bitcoin is on when I say that timer, it's got to move much quicker to the renewable energy sources to be able to kind of create a new way of using energy before those cries get so loud. It just seems like this is the number one issue of our time right now is climate change around the world. A lot of countries are universally agreeing. So I think it's all overblown. I think it's money driven. A lot of it is from the big solar and the big, the green energy. So I don't think from a logical standpoint, it makes sense to change it. But I also, the cries at some point might get too loud. So what do you think about that?
Well, I think that the real hardcore environmentalists aren't really focused on this. I think it's a fringe set of environmental movements that might be encouraged by certain crypto entrepreneurs to focus on this. 99.95% of the carbon emissions in the world come from something other than Bitcoin energy usage. So ultimately, the hardcore environmentalists are going to target cars and airplanes and buildings. And, if you've seen those islands in China where they built like 50 skyscrapers that were empty and then they demolished them all, that's an example of a real climate problem, overbuilding and destroying. I think ultimately, if there's some people are going to say, if you use an imaginary car to drive to imaginary plane to fly to your imaginary building, and I give you imaginary food and imaginary imaginary entertainment, it's cheaper. And that's the metaverse model, right? And look, the truth is, I can Zoom to you and we're having a Zoom meeting, and that's a lot more efficient than flying. But I don't think we're going to eliminate buildings and healthcare and cars and planes in the real world. I think ultimately that there's stuff for the universe and there's stuff for the metaverse. You could build a great business in the metaverse. I mean, Fortnite's a great business. Facebook's got their metaverse business. There's a lot of money to be made in the metaverse, but ultimately the universe is a distinctly different thing. So I don't really think the people that are interested in carbon emissions are going to find a solution, because of course, eliminating Bitcoin keeps 99.95% of the carbon emissions. They don't really solve their problem. It's a rounding error. And the people that are concerned about energy usage don't really solve their problem either, because 99.9% of energy usage is not Bitcoin, and Bitcoin energy usage is falling 18% a year or more because of the protocol. So ultimately, I think it's noise and it's FUD, but cooler heads and more mature heads will prevail, because at the end of the day, the use of energy, and it's not just energy, it's cryptographic hashes, right? So it's encrypted energy or hashed energy. The use of hash energy is the one universally acknowledged method to create a digital property. And digital property is worth $100 trillion to the economy. So it's useful to have a digital asset which is universally acknowledged as a property token. And the use of energy to create that is no different than the use of energy to create a building or a ship or a plane. It's a lot of energy to create stuff in the real world. Your house has got energy in it, right? Sure. So it's energy. But as people understand that a digital asset, which is property, is unique, right? As I said, it's the ethical foundation. If I as a public figure, if I'm a mayor and I want to endorse this, I have to build it on the right foundation, and it can't be on a security foundation, because the public is not going to accept, a city owned by Twitter or owned. Look what happened when Facebook was about to release their own stablecoin.
100%. That didn't go well.
They're like, like, and look at what's going on right now. I mean, politically, if there's an attack surface where there's a company or a management team, it's very difficult. So there's a lot of cool stuff in the crypto economy, but one thing you need for sure is you need a foundation that is property, common property, and is universally acknowledged as such. And so we've only figured out how to do that with Nakamoto consensus and energy. It's possible someone may come up with another way to do it. And in 10 years or 20 years, maybe someone will come up with a different technique, but it is yet to be seen. The challenge of eliminating all the energy is, if I got rid of, by the way, it's not just energy, it's technology. If I got rid of the ASICs that like Intel's going to produce and Bitmain produce, and if I got rid of the energy, then I could just create 100 copies of this, or 1,000 or 10,000. Yeah. And of course there are 10,000. And the problem with the 10,000 copies is, if I can copy something, then it's not unique anymore. And then they all compete with each other, and then they all boil off each other's monetary premium. So now you're into a functionality race, and that's a totally different business versus, it's like, do you want to own a block of granite underneath Manhattan that sits there for 1,000 years? Or do you want to own a building, which is good for 100 years? Or do you want to own a company in the building that's good for 20 years?
Yeah.
And I totally acknowledge that you need the companies, you need the buildings, but you need granite in cyberspace. And the way we figured out how to do it was with energy. So generally people that criticize Bitcoin's energy usage, they don't really understand the nuance between a property and a security. And they don't understand that you have to have a digital property as an ethical foundation. And once you actually address that issue, it's like, well, there's no alternative to that thing. There's a lot of debate and a lot of competition about everything else, but digital property is here to stay. And I don't think that the environmental FUD shuts it down any more than I think the other FUD, right? Crypto crime,
terrorism, it's all terrorism. Everybody uses Bitcoin's a terrorist,
you're seeing that, right? The entire Canada thing right now. There is going to be FUD. But ultimately, when people think about it long enough and they hash it out, they'll conclude that I mean, Gary Gensler's even said this, right? He said, Satoshi's innovation is real. And the innovation is Nakamoto consensus to create digital property in cyberspace that is owned by no particular entity and is the common property of the world, right? There are other things that are cool. I think people recognize 24/7 trading is useful. I think they understand a cryptocurrency in the form of a stable coin, like a US dollar would be useful, or any kind of digital currency would be useful. And I think they recognize the coolness of DeFi and the coolness of instant atomic swaps and friction-free flash loans alike. It's very cool and very interesting. And that's why we're all here, right? The issue is going to be, how are you going to approach it? And what's the regulatory bump? What's the regulatory impact like that we're going to go through? How bumpy will the ride be over the next 36 to 60 months?
Yeah, I think that kind of leads us to a couple other questions, but I did want to point out, like, nobody knows what's cool like Gary Gensler, for sure. I mean, that guy, he's a real hip guy, I'm sure. So here's the question. There we go. There was number two. There's number two. If we all keep a score at home. So we got this question here that comes from Arlasia or Arlea. Okay. Are you afraid that the government is going to try to ban crypto to keep the banks and the traditional system safe?
Well, I think if we work through this, right, you're going to have digital property, something I want to just buy and hold in lieu of a building or land for a decade. And I think the regulation around that, the uncertainty, is generally around laws to transfer it, KYCing it, and then capital gains or tax treatments of it. And right now, that's the laws around digital property are pretty stable since the IRS set the tax treatment for Bitcoin in 2014. In other countries, they may or may not designate it currency or property, but generally it's falling in the property category. I think if you go to the next category, digital currencies, a digital yen, a digital euro, a digital dollar, a digital yuan. I think that there's a lot of flux right now and debate over how that gets treated. And even if you look in the US, the White House, the administration would like FDIC insured banks to issue digital currencies.
Absolutely. Yeah.
The Senate would like state issued banks to be able to do this. In Congress, there's a view I've heard that a number of companies, money transfer agents and other companies should be able to do it. And the current status quo is that any of those sort of could, but right now offshore entities are. So there's a political debate about who's going to issue stable coins and how will they be treated. And that debate is going on in a bunch of countries. And how it will shake out is it's kind of unclear. If I put a congressman, a senator, and members of the administration together, they all might have three different opinions. You've seen that. I do think it's pretty obvious that the world wants digital currency. And I think the good news here, Ben, is that there's kind of universal agreement that digital currency is cool and useful. And here's an important thing chasm we crossed over 18 months. 18 months ago, a lot of intelligent people said, well, this cryptocurrency stuff, if it's so good, someone's going to ban it. And they're saying, well, maybe Bitcoin's so good that the government will ban it, and cryptocurrency is so good they'll ban it. I really think if you fast forward to today and you look at all the debate, it's pretty clear the consensus is, and this is following the China crackdown, the China exodus. I think the consensus is cryptocurrency is here to stay.
Yeah.
We need a dollar, a stable dollar. We need a digital property, and 24/7, 365 trading. That's an innovation. That's faster, higher. We have high velocity monetary assets.
But does this come from a place where, is this coming from a place where they've realized they can't ban it? Like it's fruitless to ban it. So it's almost like, now let's welcome those ideas in.
Yeah, I think that where we're at right now is we're crossing the chasm from entrepreneurial early stage. The first decade was entrepreneurial driven, kind of Wild West without many rules of the road. And the second decade is institutionalization and normalization and regularization. And you've got about a 36-month to 48-month period where some rules are clear. Like I think, for example, if you want to buy $1 billion of Bitcoin and hold it for 100 years, the rule's kind of clear. You can buy it. If you sell it, you pay taxes on it. If you don't sell it, it's like you're just holding it. That's clear. If you want to transfer $100 million of Bitcoin to someone, in Africa, you probably got a KYC, who you send it to. There's some things like that that are kind of clear. I think that the rules around exchanges, security tokens, the digital currencies, and what is and is not digital property, I think they're still a bit murky. And I think Hester Pierce has said, hey, it'd be really good if the regulators gave very clear, bright line paths. Like this is how you do it. But I think there's a bit of debate, between whether or not it should be federally chartered banks or state chartered banks or not banks at all, or just companies. And that's a political process that's working itself out right now. So I think the view is it's here to stay. We need to regulate it. And there's debate about how much regulation and will it be very progressive? Let's take a security token. My company's a public traded equity. To go public takes about 2 years of preparation, and it costs us $10-20 million a year to stay compliant.
Wow.
And our stock can only trade 9:30 in the morning till 4 in the afternoon on the NASDAQ. And it hasn't changed the way it trades in about, 20 years. Okay, so that's the old way, the 20th century way. I can see the benefit of a smallish company being able to launch their own equity token and do it fast and do it and not pay 10 or 20 million a year to stay compliant. I don't think you're going to be able to like issue your own security token and do it for free without lawyers and without making disclosures. I think it's going to cost something. The issue is, will there be a security token? Will there be a way to trade an equity 24/7, 365 on a crypto exchange? Question mark. Don't know. Would it be good? Yeah. You know, at one point, I think an offshore exchange was trading an MSTR token 24/7. And then I think the German regulators shut it down.
A synthetic asset, basically.
Yeah, like a synthetic MSTR. Yep. And, you know, so would it be nice? Yeah, like on Saturday night, how do you express your opinions? If, you know, if you're concerned about Ukraine and it's spinning up, you want to sell something so you can sell a crypto, or you want to buy something so you buy a crypto. So you can't express opinions on bonds and other stocks. And it would be nice, but we're going to wait, right? We're going to wait for some amount of time. I think that the quarterback here is the United States and probably the SEC. And, you know, say what you will about Gensler. He did teach the course at MIT in blockchain and money. And so he is decently well-versed, well-versed as any regulator we're going to find in this industry. And at the same time, it's a pretty Herculean task to give guidance on digital currencies, digital securities, digital exchange, digital properties, an entirely new set of asset class, and all the way they work together. And then think through the implications for the way they integrate with Treasury, every banking system, the CFTC, the SEC. You've got the old rules for 100 that developed over 100 years. Mm-hmm. You got the new world, and then you've got politics. Yeah. Like, even if you had God's gift, the perfect crypto regulator that understood every possible virtue of the entire space and was able to think in a godlike fashion at the speed of light, and they came up with the perfect set of regulations. If you march them into the Senate or the Congress right now, you know, like who knows what would happen?
Yeah, right? Of course. Yeah. Well, speaking of people that don't like logic, you know, you're talking about a lot of them right there. Well, let me ask you kind of to piggyback on that. We had Forgotten Space here on Twitter, and he asked this question, which I think kind of moves into a larger question here. He says, why do we have a Bitcoin mining council when they never go to hearings or educate politicians? And I want to know, like, what do you think your perspective is on yourself? Like, what do you feel any responsibility to kind of help with regulators? I know, you know, I've spoken to different political bodies, and it's something I'm passionate about, and I would like to get more involved in, whether it's lobbying for crypto or whatever the case may be. But what is the role for us that have you know, skin in the game here, that have platforms? You know, why are these people not coming to people like us and asking our opinions? I feel like a lot of times they're relying too much on, you know, while Gary Gensler may know quite about crypto, I worry about his ties with Goldman Sachs, but he may know a lot about blockchain, a lot about crypto, but, you know, most of the people that are regulating this stuff do not. What is our role and our responsibility when it comes to things like this?
You know, I mean, the Bitcoin Mining Council it's an informal association of Bitcoin miners, and the mission is to educate the world on the benefits of Bitcoin and on the benefits of Bitcoin mining. So it's an educational organization. And our number one thing we do is we run a survey and we organize all the Bitcoin miners so we can actually get real facts. One of the most useful facts we got is that 58.5% of all the energy used in Bitcoin mining in the world is renewable, sustainable energy. And we didn't know that a year ago. What we also know is we have a decent idea of the joules per terahash that go into hashing. So we can see the rate at which the energy efficiency is improving. We can see the total energy consumption. We have a sense of energy sources, and we can see the engagement of Bitcoin miners, and we publish that to the world. And then the Bitcoin miners themselves, they do brief all sorts of political organizations. There are state level hearings, there are congressional hearings, there are senatorial hearings. There's also there's all sorts of fairly accomplished crypto lobbyists and digital asset advocacy groups, you know, Digital Chamber of Commerce and blockchain associations, and their state level associations. I really think there's a lot of organizations that have this mission. Some are more focused on political advocacy. Some are more focused on educating the media and investors. I don't really think it's, it's not really our interest in doing the job of all of these various actors. Like, for example, if you're a Bitcoin miner in Japan and the Japanese politicians want to know about the impact of Bitcoin mining on the Japanese environment, I think it's better for the Bitcoin miner in Japan that speaks Japanese in the time zone that's local to go and do that. We don't really it doesn't make sense to have a centralized organization advocating for Bitcoin mining in Norway or France or Kazakhstan or Russia. It really is a global industry. What we can do is we can sort of crowdsource the data so that everybody has the facts at their fingertips. And, look, the fact is the Bitcoin mining industry is the most sustainable industry in the world. It's more sustainable than airlines and planes and trains and automobiles and hotels and construction. Anything that's actually happening in the real universe is using dirtier energy less efficiently than Bitcoin mining. And that's a pretty big fact. And the second big fact is Bitcoin mining is getting more energy efficient than any other industry in the world. So once you put those two facts together, I think that's pretty useful, a useful platform for anybody to dispel the FUD that might pop up from mainstream media or less informed constituencies.
Yeah, I think that's really good. I think that kind of if I'm picking up what you're putting down here, it's the responsibility of those that are in the know to put out the facts, and those can be at the fingertips of anybody that wants to kind of talk about crypto or regulation. It's our job to put out the facts, and then from there, what people do with them. But it's a good way to kind of organize. It's a good idea for a video, maybe if I did that, some of the best facts for crypto regulation, stuff like that could be good. So we're going to wrap up this first part of this interview here with this question. This is a question I had so many people ask. I'm very curious to get your take on it, if you even have a take on it. A lot of people from the XRP community want to know what your thoughts are on the case between Ripple and the SEC.
I haven't studied the case. And so I don't think it'd be appropriate for me to express an opinion one way or the other because I haven't looked at the detailed filings. I think that more broadly speaking, the SEC is becoming more engaged, as you can tell, in the community. I suspect that there'll be some precedents that will come out of the case. And I think that if you look at the way the SEC deals with, you have the enforcement action or the settlement with BlockFi. I think there'll be settlements and actions with other DeFi exchanges. It looks like there's interest in centralized exchanges. You saw the front page of the Wall Street Journal just a few minutes ago announce the SEC's probing Binance in the US. So I think that each of those cases will be informative, and ultimately they'll result in some kind of insight that sets some precedent. And I will wait and see what it is. I do think the industry will benefit as we get to clarity. I mean, the thing that holds the industry back is the twisting in the wind of not having bright line rules of the road.
100%.
And if you know what the rules of the road are, then I think the marketplace will develop because, Big Ben, the elephant in the room here is there's $100 trillion of money not in the ecosystem. And that money is sitting right now in negative yielding bonds and gold and real estate. Think about all the money sitting in real estate in Africa and South America. Would you rather own some Bitcoin than that? Probably. How many people would like to change their local currencies, their lira, their pesos, their bolivars for dollars, crypto dollars? A lot. How many people would like to avail themselves of yield and leverage and loans, et cetera? A lot. So there's massive demand. What holds the market back? It's the regulatory obscurity. It's the fear that people have of some regulatory crackdown. And if they actually get clear rules of the road, I think you'll see large corporations build this into their products. Right. I mean, when Google and Apple and Facebook are able to build this into their products, we go to a new level. And when someone is able to move $25 billion on the weekend back and forth on a crypto rail, we go to a new level. And so I think that those public companies and public institutional investors and public officials, they're all like waiting to understand, you know, where they can tread and where the third rail is. And ultimately, we're going to get some clarity. The question is, will it be in 36 months or 24 months or 12 months? I don't think it's coming in the next 12 weeks.
Yeah.
And I think it's painful if you're an investor in this space. If you're dealing in parts of the crypto ecosystem, there's a lot more uncertainty and risk. And on other parts, there's less risk, but less functionality. And so that is kind of the reality that we're in right now.
Yeah, I think that's really good. Very, very well said. I think that when it comes to, you know, specifically the Ripple case, is the clarity that comes out of it. I believe a settlement is, you know, the most likely answer. I mean, almost all of the SEC cases in crypto have ended in settlements. And, you know, regardless of whether we get a lot of precedent or not, because I expect a lot to be redacted and sealed. The fact is, if XRP is not considered to be a security, that's the big thing going forward. If XRP is not considered to be a security, what in crypto could be, you know, I think that's going to be a question. It's going to, I think, give a lot more confidence to investors. Well, Michael, thank you so much for joining us for this part one of this interview. We talked a lot about regulation, a lot about, you know, Bitcoin mining and energy and things like that. In part two, we're going to talk more about, you know, where the Bitcoin price is, where you expect it to go, micro strategies, buying strategies, and things like that. So everybody drop your comments down below on part one. Let us know what you think the most interesting part is, and, you know, come back tomorrow for part two.